Hey everyone, welcome back to the Investing Iguana channel. I'm your host, Iggy, and today we've got a special treat for all you finance aficionados out there. We're going to delve deep into the financials of United Overseas Bank, commonly known as UOB. This is one of Singapore's largest banks, and it's been making headlines for various reasons. We'll dissect its recent performance, look at the risks it faces, and try to answer the million-dollar question, are UOB's current profits sustainable? So, sit back, relax, and let's dive right in. First off, let's set the stage with some numbers. UOB has seen its share price decline by 9% this year. Now, that might set off some alarm bells, but before you jump to conclusions, consider this: UOB's financial results for the first half of 2023 have shown a whopping 45% increase in net profit, along with a 14.1% return on equity. Those are some pretty impressive figures, but as we all know, the devil is in the details. So let's dig a little deeper to understand what's really going on. Earlier this year, we expressed some concerns about UOB's non-performing assets, or NPAs for short. For those who might not be familiar with the term, NPAs are essentially loans that the bank is unlikely to collect on. They're like the dark clouds in a bank's sunny sky. The good news is that these clouds seem to be dispersing. NPAs have actually decreased, and the risk of losses from these assets in Singapore is relatively low. This is a positive sign, indicating that the bank's loan portfolio is robust and that the financial health of its borrowers is generally good. Now, let's talk about the factors driving these profits. We're currently in a higher interest rate environment, which has been beneficial for banks across the board. UOB is no exception. Their net profit for the first half of 2023 skyrocketed to SGD 2.925 billion. The primary driver behind this surge was an increase in interest income, which went from SGD 3.549 billion in the first half of 2022 to SGD 4.846 billion in the first half of 2023. That's a substantial increase, and it's worth noting that the net interest margin, or NIM, improved from 1.63% a year ago to 2.13% in the first half of 2023. NIM is a key indicator of a bank's profitability, and an improvement in this metric is always a good sign. While we're on the subject of income, it's worth mentioning that net fees and commission income were slightly lower, but this is a minor issue in the grand scheme of things. Banks have multiple revenue streams, and a small dip in one area can easily be offset by gains in another. UOB has also been making strategic moves to expand its footprint. They've successfully integrated Citibank's consumer banking business in Malaysia and are on track to complete the integration in Indonesia by the end of this year. Next year, they plan to integrate the business in Thailand and Vietnam. This is a significant development because it's expected to bring in an additional 1 billion SGD in revenues. That's a substantial uplift and could be a game changer for the bank in the long run. For those of you who are investors or are considering becoming one, UOB has a shareholder-friendly dividend policy. They commit to paying out between 40 to 50% of their earnings as dividends. Based on the current share price of SGD 28.30, that translates to a decent yield of 5.7% on a trailing 12-month basis. In a world where decent yields are hard to come by, this is certainly an attractive proposition. Now, no analysis would be complete without discussing the risks, and UOB is no exception. One of the most significant risks that UOB faces is its exposure to China's economy. China is a major player on the global stage, and any economic turbulence there could have ripple effects that impact UOB. Additionally, a large chunk of UOB's profit, 71% to be exact, comes from Singapore. So, the economic health of Singapore is another critical factor that could impact the bank's performance. One of the risks we can consider is that net interest margin, NIM, may have peaked. The 3-month Singapore overnight rate average, SORA, which is the key benchmark used by banks for home mortgages, has risen from 0.2% in January to 3.7% in September 2023. UOB is currently offering mortgages at 3M SORA plus 0.7% interest. This means that there is a risk that interest rates and NIM will start to fall next year. However, we do not believe that this will happen as early as 2024, as the chairman of the U.S. Fed recently indicated that we may need to get used to a higher for longer period in terms of interest rates. Some people may argue that the current level of interest rates is normal and that the abnormally low interest rates of the past 20 years were unhealthy. However, we still believe that there is a risk of NIM compression in the near future. Speaking of Singapore's economy, it's worth noting that while the GDP grew by 3.6% in 2022, there has been a drop this year. The manufacturing sector, in particular, contracted by 7.5% in the last quarter. This is a concern because manufacturing is a significant part of Singapore's economy. A contraction in this sector could be indicative of broader economic issues that might affect the banking sector, including UOB. Singapore experienced an increase in foreclosures and auctioned properties in 2022, but these auctions were not fire sales. The Singapore real estate market remains resilient, and UOB has a similar average loan-to-value (LTV) ratio for both private residences and commercial properties at 50 to 60%. UOB's exposure to the office sector is 8% of its loan book, and its loans in this sector are largely backed by strong sponsors. To wrap things up, UOB is currently in a strong financial position, but there are clouds on the horizon. The bank faces risks from potential economic downturns in Singapore and China, and there's also the question of whether the current high interest rate environment, which has been beneficial for the bank, will continue. While the U.S. Federal Reserve has indicated that we might be in a higher for longer period in terms of interest rates, there's no guarantee that this will be the case. In conclusion, while UOB and its peers in Singapore appear to hold relatively low risks of facing large write-offs from non-performing assets, there is more uncertainty regarding whether interest income will remain as elevated as it is now. Given these factors, our stance on UOB remains a hold for the time being. Alright, folks, that's it for today's comprehensive look at UOB. If you found this video helpful, don't forget to hit that like button and subscribe for more financial insights. Until next time, this is Iggy, the Investing Iguana, signing off. Stay smart, stay invested. If you found this video helpful, please hit that like button. It really helps us to understand what kind of content you want to see more of. And don't forget to subscribe. Here at the Investing Iguana, we're dedicated to helping you navigate your financial journey with confidence and clarity. And guess what? There's plenty more where this came from. Stay tuned for our upcoming videos, where we'll tackle other interesting financial topics like the best investment strategies, understanding the stock market, and how to make your money work harder for you. As always, we're thrilled to have you as part of our Investing Iguana community. Your support helps us keep producing free content like this. Remember, every like, share, and subscribe goes a long way. Thanks for joining us today. Keep investing, keep growing, and we'll see you in the next video. Bye for now.